Okay, have you seen the front page of today's Business Day? Very bold headline, top story, bank stocks rally on offshore PFA buying. GTB crosses 1 trillion market cap, bank index up 31% year to date. That's the front page story. And that's the next conversation we're having. It's been a rally on the market. 20 trading days, more than 1 trillion naira in market cap for the Nigerian Stock Exchange. It's never been this hot in the last 12 months. In fact, the last time we saw this was quite a long time ago. Now the market is back in double digit as far as the market cap is concerned. Joining us here is the brand new Managing Director and Chief Executive Officer of Afrinvest Securities, Ayodeji Ebo. Good morning.
Yeah, good morning.
This is a good time, isn't it? And I'm happy for you folks making money in the market right now as far as the equities is concerned. So let's have some very technical conversation about where we are. We've seen the numbers. Yeah. 1.2 trillion naira in 20 days. 13.66% in terms of the index. Year to date, almost 9%. We have some low shedding. The banks are leading this rally. So let's get a bit of a sense of what this market speaks to. Read the tea leaves for us correctly as far as some folks say, this is unsustainable. This looks like it's going to bottom out anytime soon. What do you think?
Yeah, it's interesting to see this rally and how long it's been sustained for. What would be in the mind of investors, like you mentioned, is how sustainable is this? But if you also look at what has prompted this rally that we've seen, it's all on the back of the investors and exporters window. Investors, especially the foreign investors, have been looking for the right moment in terms of policy, and we've seen CBN carving out this window for the foreign investors, allowing markets to determine rates at that window. So part of what we've seen happen is for the foreign investors, before the setup of the window, the Naira was trading around 315 at the interbank market. So now, coming to this window, for every $1 million, we are bringing it, as at yesterday, closed around 381 Naira. So that's, when you look at the spread, that's significant. One, they are getting value for every dollar that they bring in. Secondly, when you also look at it in dollar terms, this time last year, when you look at in terms of how the amount or the share price in dollar terms is also very cheaper, because it's cheaper when you compare in terms of the dollar based on either the depreciation or the devaluation of the Naira. Also, looking at in terms of multiples, look back in terms of, like, let's say, for instance, GT Bank, last 3-4 years, price to book value, GT Bank was trading around 2.6 times. But even before the rally started, it came down to as low as 1.3 times. So it means, despite the decline in share prices of stocks that we've seen in the past years, earnings have continued to grow, which I highlighted a point that there's more, what determines or what shapes sentiment is more of macro factors rather than fundamental. So that's what we've seen in the past. So in terms of the environment, though still very cautious, we feel the government, in terms of monetary policy, fiscal policy, are getting things right, and confidence has begun to rise. So if barring any negative statement or policy that would trigger or would reverse some of these gains, we feel this may be sustained for a longer time.
We'll get some time later to talk about the fundamentals, the economic fundamentals and the market fundamentals. But let's go back to the technical side of this conversation. If I had invested in the banking index, for example, on January the 1st this year, I'll be looking at about 31%, according to this newspaper report. Mm-hmm. Right. So this looks like one basket, one index, one asset that has beaten inflation so far this year, isn't it?
Yeah.
And has beaten my interest rate level.
Yes.
So which means that even at 18% high end, I still have about 12% gain on investing in the banking index this year. That looks a lot of money.
Yes, that's a lot of money. And when you also look at the banking sector, account for over 50% of activity. So for foreign investors, they always liquidity is key to them. So when they look at stocks that if they wish to exit at any time, there will always be a willing buyer or a willing seller and will not be able to depress the share price at that particular point in time. So, for instance, the banking sector, 31% year to date, very impressive, positive real return for foreign investors, in addition to the depreciation gains in terms of the FX they brought in when you look at that. So for them, it's very interesting. Also trying to compare even some of these banks to other its peers within the SSA. We look at in terms of multiples, still trading at significant discount to some of these banks within the African region.
In Kenya, in South Africa, perhaps Ghana, isn't it?
Yes.
Those are the regions you're talking about.
Yes. Like the Nairobi Stock Exchange, price to book in terms of the market is still around 20 times. And for Nigeria, despite in spite the rally, it's still around 13 times. So you still see there's still room for growth.
Room for growth. When folks look at the economy in 2016, seriously depressed, and they look at the stock market page in the newspapers or they watch television, and they look at the share prices, looks, oh my God, and I bought these stocks when it was 20 and 30, but it's not about 10. Then it depresses them, isn't it?
Yes.
Well, because they don't understand how the market works, basically.
Yes, like I highlighted, it means that the macroeconomic indicators is key to investors' decision beyond the fundamentals. So despite the strong fundamentals, you look at even the banking stocks, most they've grown their earnings in the past 2-3 years. They've sustained that growth momentum despite the decline in share price. So investors looked away from that strong fundamentals and focused on the political instability in the last 2 years, the FX illiquidity. So all those factors combined together determine the investors' decision.
When I get folks ask questions and say, oh, the stock market is, I don't want to use the word useless, but I'm going to put it there because they say, oh, the stocks are worth ordinary papers. Why should I have bought it? I've thrown my share certificates somewhere I don't even want to see them again. Perhaps they were looking at the fact that the political landscape 2015 2016 was not encouraging. They had a ban on 41 items. Then you have the naira heading towards the bottom of the ocean.